You see it everywhere. Invest for passive income. Make your money work for you. Look, I got tired of the hype. I wanted to know how much money a normal person can actually make by putting $1,000 into the stock market. Not some hypothetical scenario, but a real, tangible $1,000 investment. Is it even enough to matter, or is it just a drop in the bucket? So, I did it. I put my own money on the line and invested $1,000 to find out. In this video, I'm going to show you the exact dollar amount I made, right down to the penny. And more importantly, I'll give you my honest, no-hype verdict on whether it was actually worth it. The answer might just surprise you. Before we kick this off, smash that like button, comment below your opinion, and if you like, subscribe for more insights. Let's be real. Most of us aren't Wall Street wizards. We're regular people working hard for our money, and that's exactly why this experiment matters. I wanted a real-world answer for people like us. The biggest problem we all face is a silent thief called inflation. As of the latest data from August 2025, inflation is running at 2.9%. What that means is if your $1,000 is just sitting in a checking account, in 1 year, its buying power will shrink. It will feel like you have less money, even though the number on your statement hasn't changed. It's like trying to fill a bucket with a slow leak. So, what's the usual advice? Put it in a savings account. And yeah, you can find high-yield savings accounts that are paying pretty well right now, some even up to 5%. That's a fantastic, safe option. But can we do better? Is the stock market, with all its risks and complexities, a more powerful tool for building wealth, even with a small amount? The internet is packed with gurus showing off million-dollar portfolios, promising you can do it too. But it's hard to relate to that when you're starting with just a few hundred or $1,000. My goal was to cut through all that noise. I wanted to run a totally transparent experiment to find out if a $1,000 investment is a meaningful first step, or just a financial dead end. So, how did I actually do it? This is the part that might seem complicated, but I promise, it's way simpler than you think. First, I had to decide what to invest in. My number one rule was this: I am not trying to be the next stock-picking genius. I don't have time to research hundreds of companies and try to find the one that's going to be the next Amazon. That's a high-risk game, and honestly, it's like trying to find a needle in a haystack. If you pick the wrong one, you can lose everything. I wasn't willing to take that chance with my $1,000, so I chose a much simpler, and in my opinion, smarter strategy. I decided to buy a small piece of the entire haystack. I did this using something called an ETF, or an exchange-traded fund. Think of an ETF as a basket. Instead of buying one single stock like Apple, you can buy an ETF that holds tiny pieces of Apple, Microsoft, Google, and hundreds of other companies all at once. It's instant diversification. Specifically, I put my $1,000 into the Vanguard S&P 500 ETF, which has the ticker symbol VOO. There are a bunch of similar funds out there, but I picked this one for 3 simple reasons. Massive diversification. VOO holds stock in the 500 largest companies in the US. I wasn't betting on one company to succeed, I was betting on the American economy as a whole to keep growing over time. That feels like a much safer bet. Incredibly low cost. A hidden killer of your investment returns is fees. VOO has an expense ratio of just 0.03%. For every $1,000 I have invested, Vanguard only takes 30 cents a year to manage it. It's practically free, which means more of my money stays working for me. A proven track record, the S&P 500 has a long history of growth. While it definitely has its down years, historically, it has delivered an average annual return of around 10%. Past performance is no guarantee of future results, but it's a powerful indicator. The actual process was almost laughably easy. I used a popular brokerage app on my phone, linked my bank account, transferred the $1,000, searched for VOO, and hit buy. That's it. The whole thing took less than 15 minutes. It was easier than ordering a pizza. Once the money was in, the hardest part began. Just waiting. And this is where the real psychological battle of investing kicks in. It is so tempting to check your portfolio every day. You see it go up a few bucks and you feel like a genius. Then it drops $10 the next day and you get that pit in your stomach, thinking you've made a huge mistake. And trust me, it did drop. The market never moves in a straight line. There were weeks where my $1,000 was suddenly worth $980, then $970. The beginner's instinct is to panic and sell to cut your losses, but that is the single biggest mistake you can make. You have to remember the mantra, time in the market beats timing the market. You have to zoom out. During this waiting period, something small but pretty cool happened. A little deposit showed up in my account. It was a dividend. Dividends are a key part of the passive income story. Since VOO holds 500 companies, many of them, like Apple and Microsoft, share a small portion of their profits with their shareholders, which now included me. VOO collects all these little payments and passes them on. The current dividend yield for VOO is about 1.14% to 1.15%. It wasn't much, just a few dollars, but it was money I earned for doing absolutely nothing. It was true passive income. Alright, moment of truth. I let my $1,000 investment sit for exactly 1 year. I tracked the ups and downs, watched the dividends roll in, and resisted every urge to mess with it. So, after 1 full year invested in the S&P 500, how much did my $1,000 actually make? Let's break it down. First, the passive income from dividends. Over 12 months my $1,000 investment generated $11.40 in dividend payments, based on the 1.14% yield. Okay, $11. Not exactly life-changing, but that's only half the story. The other part is capital appreciation, the increase in the ETF's price. The past year has been pretty solid for the market. So, after 1 year, my initial investment of $1,000, including both its growth in value and the dividends I earned, turned into $1,159.60. That is a total profit of $159.60, a total return of nearly 16% on my money for the past 12 months. $160. Let's be honest, that won't buy me a new car or a down payment on a house. It's a nice dinner out, a few new video games, maybe a couple tanks of gas. So, the big question remains, was it actually worth it? To answer that, let's compare it to the alternatives. The short-term verdict. If I had left that $1,000 in my checking account, I would have made exactly zero. In fact, because of that 2.9% inflation, I would have effectively lost about $29 in buying power. My money would be worth less today. What if I used a high-yield savings account? Let's say I found a great one paying 4.5% APY. After 1 year, my $1,000 would have turned into $10.45, a profit of $45. Definitely better than nothing. It beats inflation, which is awesome. But my stock market investment made me $159.60. That is more than 3 times what I would have earned from the best safe alternative. So from a short-term, 1-year perspective, hindi pa for daw bao, hindi dat the then, hindi din side, isher gao din sizinyo. Hindi ought is a huge yes. It was absolutely worth it. It took 15 minutes to set up and made significantly more money. The long-term verdict, where the real magic happens. But the real reason investing is so powerful isn't about 1 year, it's about what happens over decades. This is where compound interest, what Einstein supposedly called the 8th wonder of the world, comes into play. Let's use that historical average return of 10% for the S&P 500, and see what that $160 profit really represents. It represents the start of a snowball. If I take my $1,000, never add another penny, and just let it ride at that 10% average, the numbers get staggering. In 10 years, that initial $1,000 could grow to almost $20,600. In 20 years, it could become over $6,700. And in 30 years, that single one-time investment of $1,000 would be worth over $17,400. That is the power of compounding. Your money makes money, and then the money it made starts making its own money. But now what if you didn't just invest $1,000 once? What if this experiment got you started, and you decided to invest that same $1,000, and then add just $100 every single month? Assuming that same 10% average return, in 10 years, you'd have invested $13,000, but your account could be worth over $22,600. In 20 years, you'd have invested $25,000, but your account could be worth over $75,000. And in 30 years, you'd have invested $37,000, but your account could be worth a life-changing $226,000. That is the answer to whether it's worth it. That first small step of investing $1,000 is the spark that can ignite a massive amount of wealth down the road. If seeing these real numbers has helped demystify investing for you, do me a favor and hit that like button. It tells YouTube that this experiment was valuable and helps other people find it. And if you want to see more real money experiments, maybe I'll try a dividend-focused strategy next, or explore international stocks. Make sure you subscribe and ring that notification bell so you don't miss out. Now, I've got a question for you. How would you invest $1,000? Would you go with the S&P 500 like I did, or do you have a different strategy? Let me know in the comments below. I'm genuinely curious, and I read every single one. So, how much money does $1,000 in stocks actually make? In my one-year experiment, it made about $160, not a fortune, but a powerful start. The biggest takeaway is this: investing a small amount of money will not make you rich overnight. Forget the hype. But what it will do is put you on the right side of the wealth equation. It's the difference between your money slowly dying in a bank account versus it quietly working in the background to build you a better future. Don't get lost in the hype, but more importantly, don't let the fear of not having enough paralyze you into doing nothing. The hardest part is starting. That first $100, that first $1,000, is the most powerful money you'll ever invest, because it's the one that gets the snowball rolling. Your future self will thank you for it. Thanks for watching.